Now, we're talking about pockets of spend, discretionary spends which are doing well. We're talking about some consumption names out there. I think if you club autos within the consumption pack or discretionary spends, then that's a space that is looking really, really good. Not just today, but over the last 12 months. The numbers are looking okay. The question mark is, do the technicals or the charts also show the same thing? Well, that's the question that we posed to Manav Chopra. He's with us in our studios to talk about, well, a specific set of stocks to start off with. Manav, really good having you. Thanks so much for joining in. We'll talk about the markets and specific ideas in a bit, but let's talk about charts of the auto pack. Want to start off with maybe the auto index.
Yes.
And tell us, why is it that you're choosing to show the auto index today? If we can have the chart on the screen.
Thank you, Neeraj, for having me here. So we have seen auto packs, has been in a very good uptrend, and it has been in a good uptrend since 2010. So if you look at this chart, at the lower panel is a price chart where the index has been rising in a series of high tops and bottoms, and the lower chart is the support line. So whenever the price tests the lower panel is the time where you get into that chart, into the index, and it gives you a very good margin of safety. So if you look at the chart recently, when the auto index topped out in December, it declined and it tested its long-term support line. So it definitely provides a very high margin of safety.
Okay.
So the time when you get into the auto index or any sector for that matter is basically you want to be a part of the trend, and you also want to enter when the prices are at crucial support levels. So
in your favor,
that is, yes, absolutely in our favor, and more than that, it is in a 8 years channel formation. So any reversal at the channel, it further validates the formation. So exactly what has happened in the past,
Okay.
So we have seen whenever there has been some reversal formation, eventually there has been a sustained rally for at least 20%, and eventually it has tested the higher part of the channel. So looking at this current formation, the trend is definitely intact. Now, when we look at the higher, the chart on the top is basically a relative strength comparative chart.
Okay.
So it is derived by taking the Nifty auto index and we divide it by Nifty 50. So we get a ratio.
Why would you do that?
So we also want to understand. We don't want to see even the stocks which are showing absolute returns, but we also want to see if the auto index would actually go in future and outperform the broader index.
Okay.
That is one of the key important things. And we've also witnessed in the past that there has been a lot of sectorial rotations that happen in the markets. There has been phases in the past where auto packs, in spite of being in a good 10 years uptrend, there has been some pockets of consolidation. You must have seen that has been highlighted. In the past, this pocket of consolidation usually lasts for a cycle of around about a year, and then it sees a breakout on the upside.
Sure.
So at the current levels, when we see at this chart on the upside, we have seen approximate a year consolidation within the Nifty auto packs, and looking at the support that has been taken at the long term, and plus the consolidation cycle which is likely to come to an end. So I think eventually you will see a good breakout happen.
Okay.
And in the
post this consolidation cycle, we see a bit of a breakout that is happening.
Yes.
So it could happen this time around as well.
Absolutely, it could happen.
And there is a double confirmation via this chart as well.
Perfect. Yeah.
Okay, so that's as far as the autos go. Now the question mark then therefore on the minds of everybody is that how do we play this? And if you want to play this via specific stocks, what are the stocks to look at? So let's get the first stock on the screen. There are 3 or 4. I don't remember which one have we gotten the first one. Okay, the first one is Tata Motors. Maybe it's Navneet, it's just a confluence of factors. Goldman Sachs, I believe, has come out today and said that there are reasons to buy into Tata Motors.
Last week among the Nifty constituents, the
That
stock's
too.
been gaining.
Okay, so explain the chart.
So this chart is completely opposite of what the auto index was showing. Auto index was in a broader rising channel, and this stock is in a falling channel formation.
Okay.
So, but one very key important thing, in spite of this stock being in a falling channel pattern, it has taken support at the lower end. And so when the stock is declining in a falling channel, so basically this defines that it is at a oversold level in terms of price, and within the channel, this is the minimum target that it usually retraces up to. When we look at the lower panel, this is nothing but one of the indicators, which is an important momentum indicator, and we see this momentum indicator since 2016 has not breached this support levels. So it is saying that even though the stock has tested its lower support channel, but the long term, I'm talking on the long term oversold indicators are at the bottom. And usually when there is and we have seen a small reversal that has happened from the oversold level. So usually in such formation, you know, it is providing you a very high margin of safety. This is the time where you can go and take your high contra bets. And you know, if you see at this chart very closely, last 4 weeks of decline that we've seen has been retraced in 1 week itself. So it is talking about a lot of short squeeze pattern that is coming into the picture. I sense in the near term perspective, the immediate support of 340, 350 would hold. It would actually go and test the levels which is close to the levels of 400, which is the upper end of the channel. And looking at the overall formation, I sense there could be a breakout that could take place, because, you know, when we look at the momentum indicators, you know, the prices have formed a lower low, but the momentum indicators has not breached its previous low. So it is sensing that, you know, it is at very much deep oversold levels, and a good retracement or a sustained retracement rally could be witnessed in Tata Motors.
Okay. Can happen up till 400, may even extend beyond that as well.
Absolutely.
Okay, that's interesting. What's the next stock on the radar, Manav? That's Eicher Motors.
Yes. So historically, we've seen, Neeraj, you know, Eicher Motors prior to 2016 used to give sustained rallies without any brief corrections. But since past 2.5 years, you know, we can see on this chart there has been good swing lows formed within a rising channel formation. So this rising channel are the areas which helps you to buy at the support and probably look to book profits at the high levels. So when we look at this chart on the upside, you know, the stock has declined 20% from its recent peak. And when a stock is in a good uptrend, the momentum indicators, that is the oscillators, are very sensitive on the oversold levels. What I'm trying to say is that if a stock is in a good uptrend, the momentum oscillators will rebound sharply from the oversold levels and will add further you know, throttle for the bulls into the stock. So when we see if the stock has declined since past 4 months, you know, after a decline, you know, it sustained, it formed a bullish reversal near the support channel. So it added further confluence. Yes, you know, the overall pattern is intact. Moreover, the auto index actually topped out in December 2017, and it started forming a series of lower lows. But Eicher Motors actually tried and, you know, started making series of minor higher bottom, which also further added some confluence. So looking at this chart and with the breakout on the monthly perspective, I'm quite confident, you know, the stock is eventually going and testing the higher part of the channel. So even at the current levels,
is what level?
It's close to 36,500 to 38,000. But on the immediate basis, looking at the momentum, 34,500 cannot be ruled out. I mean, that's the immediate target, but 38,000, 36,500 is the target that we are looking at.
Manav, I have a question there. So far, you said the outperformance will be due to stocks like Tata Motors and Eicher, which so far have been underperforming actually. So
Right.
do you think stocks which are actually oversold, they will be the ones to lead the rally if the Nifty Auto Index happens to go
Absolutely.
higher?
In fact, that's a very good valid point. You know, within the markets, you know, we've seen a pocket of sectors outperforming, and within the sectors, you know, there are stocks which take some leadership in different phases of their own cycles. So I sense in my picks, I have not mentioned stocks like Maruti or Ashok Leyland or even Escorts. So I sense there are different cycles of stocks which will outperform depending upon the margin of safety. See, because at 10,500 index, when we are talking of some new investment ideas, the margin of safety plays a very, very key important role, and for the investment purposes. So I think keeping the cycles in picture, you know, and the past performance, I think we have identified certain stocks basis on those criteria.
Okay.
Well, we have one last stock, Manav, that we want to talk about, and that should come up on the screen as well. I think one of them was Tata Motors, then Eicher Motors, and the next one on the screen, the last one, Hero.
Yes. So similar formation.
Actually, M&M. Sorry.
Okay.
Yeah, I think we chose. Yeah, there is M&M, right? This is M&M.
Yes, this is M&M.
Okay. Yeah.
So
talk about M&M.
Yeah, we will. So M&M is also a stock which actually has shown some sort of different formation compared to others. You know, this stock was in a 4 years of sideways consolidation when the entire auto packs was showing a good amount of series of outperformance. We can see within the rising channel, the stock was in a sideways time correction. So usually we've observed that when a stock gets into a time correction is when the weaker hand gets out and the stronger hand starts getting into the picture. We look at the lower panel, which is the strength index, which talks about the strength of the stock. So even though when the prices were in a sideways correction mode, the bullish support was still held. So it clearly says that, you know, even though it was in a time correction, this was not a distribution but more of an accumulation. And when the auto index actually started to come down from December highs, we did see, in fact, M&M started breaking out on the upside after 4 years of consolidation pattern. So this is something which should not be ignored, and I personally sense M&M in next 8 months or 10 months could be one of the best leaders of the auto packs. I have given a conservative target of 1000, but looking at the overall formation and this picture, I'm keeping the width of the pattern, which gives you an immediate target of 25%, but will not be surprised to see M&M towards the levels of 1500 to 1800.
Wow, we'll wait and watch for that. So, Manav, well, a set of stocks that people can watch out for. Manav Chopra believes there is merit in going in the auto pack. A bit later on the show, we'll get in Hemant as well and talk about his thoughts, not just on autos, but a bunch of other spaces as well. But for now, a very interesting management that we talked about before we dive full tilt towards the last one out of trade, and that's MMP Industries. It's evoked interest of veteran investor Kenneth Andrade's Old Bridge Capital, as a result of which Old Bridge picked up 1.26% stake, and the stock is locked on an upper circuit. So what's the company about? What are the numbers looking like? Let's ask that to Arun Bhandari, the CMD of MMP Industries. Joining in, of course, to take the conversation forward is Nikki Mirchandani from our research team.